Welcome to Vitta Niti with Veraj. With the Income Tax Act 2025 coming into force from 1st April 2026, many people are confused. Have rules and regulations determining residential status changed? What happens to their NR status? In this video, we will try to understand this clearly in simple language for residents planning to move abroad, for NRIs, for working professionals, for students turning employees abroad. Let's see why residential status matters. India does not tax you based on citizenship. India taxes you based on your residential status. Your residential status determines whether your foreign salary is taxable, your overseas investments are taxable, your global business income is taxable. Let's see the basic residency rules under the 1961 Act. You are considered to be resident if you stay in India for 182 days or more in the financial year, or you stay for 60 days in that year and 365 days in preceding 4 years. The only exceptions are the 60-day condition becomes 182 days if you are a crew member of an Indian ship or an Indian citizen living India for the purpose of employment outside India, or person of Indian origin and citizen of India coming on a visit to India. But there has been confusion online. Some articles suggest that under the 2025 Act, you must secure employment before leaving India. Let's clarify this. Both acts use the same wording for the purpose of employment outside India. The wording has not changed. It does not say after securing employment or only with employment contract. So, legally speaking, if you leave India with genuine intention to take up employment abroad, the relaxation applies. However, if you leave India for tourism and later happen to find a job, then your claim may be questioned. The key factor here is intention at the time of departure. Let's see with these two examples. Suppose a person stays in India for 140 days in a financial year and is leaving for job abroad, then the second condition of residency of 160 days will be substituted with 182 days and person will become non-resident for the relevant financial year. In the second example, the person has stayed in India for 185 days. So, irrespective of whether he falls in the three exceptions mentioned above, the person will be considered resident for the financial year as he has stayed for more than 182 days in a financial year in India. Now, let's see categories of residency that a person can hold. There are two primary categories, that is resident and non-resident. And under resident, there are two subcategories that are resident, ordinarily resident, resident, not ordinarily resident. For deciding the primary category of residency, we have seen in earlier part of the video that two basic rules are applied, that is 182 days and 60 plus 365 days rule. Further, for deciding the subcategory under resident status, that is to become RNOR, any one of the two conditions needs to be satisfied. That is, the person needs to be non-resident in 9 out of 10 preceding tax year or stay in India should be less than equal to 729 days in 7 preceding years. If both the conditions are not satisfied, then the status of residency is resident and ordinarily resident. Coming to the taxability of income as per residential status. For ROR status, his global income will be taxable. For RNOR status, Indian income plus limited foreign income will be taxable. For NR status, only Indian source of income will be taxable. Now let's see what changes under the new Income Tax Act 2025. Short answer to this is there is no major structural change in residential rules. The following remain the same: 182 day rule, 60 plus 365 day rule, relaxation for employment outside India, and also the RNOR category. The only visible structural change is previous year is now called tax year, but the meaning of both remain to be same. If you understand residential status earlier, the logic remains largely the same. So, as the residential status acts as a powerful tax trigger, you need to plan before you move, not because the law changed, but because you must prove your residential status if questioned. Remember, burden of proof lies on the taxpayer. So, plan your departure dates, track days of stay in India carefully, maintain passport entry-exit details, keep visa copies, and foreign employment records. Let me summarize clearly. Residential status rule remains substantially the same under 2025 Act. No new requirement of confirmed job before departure. Global income still taxable for residents. NR and RNOR categories continue. Planning your days of stay is extremely important. Thank you. If you found this useful, share it with someone moving abroad. Subscribe for more such simplified tax insights. Thank you for watching.